Stop leaving your family's wealth exposed in these uncertain times. Big banks and soulless corporations won't deliver this personalized plan you need to protect and grow what you've built. RockLinc Investment Partners gives you independent, battle-tested advice from professionals who actually focus on what is happening and know how to navigate volatility. With a proven history of success through tough markets, we'll position your family to be wealthier in any storm and come out stronger. Don't wait. Call 905-631-5462 or email info@rocklink.com today. That's link with a C. And we're back, our final segment of this Monday, June the 8th. Jonathan Wellum joining us, CEO of RockLinc Investment Partners. Welcome once again, Jonathan.
Thank you very much, Mark. Good to speak with you again.
A couple of things going on, and we're going to hit them in terms of the economy. And I want to ask you about SpaceX now. SpaceX, I guess there could be an IPO. That's an initial public offering of stocks. And essentially people will get an opportunity to own a share of that company or multiple shares, depending on how much money they want to invest. And there's also word that SpaceX, these are companies that are owned largely by Elon Musk, and Tesla might become one giant company. This is going to move markets, and it's a massive investment that people are looking at right now. A lot of people are talking about it. Can you fill us in on what's going on with that?
Sure. So you have Tesla, and of course, everyone knows the cars, but really where the value there is robotics. It's a leader in robotics, automated driving systems, and that's really what drives the value of Tesla up to about $1.6 trillion. So it's more than all of the other manufacturers of autos put together, but it's not really just an auto company, it's robotics. So then he's with SpaceX, which that incorporates all of his space travel, the launches. So he uses the ships to go up into space, and he's used it in particularly to launch satellites. So he's created one of the largest satellite companies called Starlink. And any one of us can sign up to Starlink, and then you can get all your download of information, your cable, television shows, all that kind of stuff. You bypass cable. Very efficient, incredibly powerful, doesn't go down with bad weather and so on. And so it's being used around the world. You don't have to build out all your terrestrial costs, like all of your piping, your fiber optic lines to each home and stuff like that. You can bypass all of that. So it's very powerful. That's growing very quickly. That's about 60% of the revenue in the SpaceX. But he's also got other things going on there. So he's got also this idea to build data centers in the sky. Now, this is a really interesting idea. You can cut the cost of energy quite a bit. It's cool up there. You can get sun here 24 hours a day. And so this is something that people are really looking at as he creates scale for energy. And you don't have to do it terrestrially, where there's a lot of challenges down on Earth, obviously, to build these data centers. He's also got a number of other applications, compute power for the energy, compute power for the hyperscalers. So the hyperscalers would be the Googles, the Amazons, the different AI companies. So what he's building, if you put all of that together, it is a massive organization. So if you take the IPO price, the initial public offering price that they're talking about this week, that's about 1.75 trillion. If you add the 1.4 trillion or so of Tesla, you're talking about over $3 trillion in those companies. But the future growth is substantial if he can pull this off. And of course, Elon Musk is known for pulling off high risk, really unique opportunities. And betting against him, I think, would be very foolish given his track record. The potential for this company is massive. It could, if you put those companies together over the next 5 to 10 years, this could easily be a $10 trillion company plus. The scale is amazing. His technology is unbelievable. And the kind of areas that he's getting involved in are massive business areas. So he's also created EWS. Everybody heard of AWS, Amazon Web Services. US is Elon Web Services. So he's been doing that already up in the skies. This is a big deal. It's a big offering. My caution to investors is just be careful. There's going to be a lot of hype. It is coming out at an expensive price, no question about that. And there's going to be volatility. Be patient, and you might be able to dollar cost average and add it to portfolios over time at much more attractive prices than what it comes out at.
Yeah, I guess when an IPO comes out, there's a lot of excitement, and people, I guess everybody's going to be jumping in, driving the price up, and then find after a day or two that they overpaid.
And this is a big one. So he's raising $75 billion. That's second only to Google, which is in the process right now of raising $85 billion. So this is a large, if not the largest, be the second, maybe the largest IPO, initial public offering. So this is a massive amount of money. I've heard that it's twice oversubscribed, which what happens is people put in offers to buy at that price. And so you've got twice as many offers now than stock available. That might sound great, but often these issues, the oversubscription can be 4, 5, 6 times. But this is so big, Mark. It's 75 billion is a lot of money. Really big institutions would have to be involved. There's some retail investors also. But yeah, just be careful. Elon has quite the track record. This is being hyped. Everyone's talking about it. Often that's a sign that to be patient, and in 4, 5, 6 months, you could buy it maybe substantially lower. But I think over time, this could be quite the business and be worth a lot more, but just be patient.
And I guess Elon could then become the first trillionaire that we know.
Yeah, shocking, isn't it? Yeah, he will be. If this stays at $1.75 trillion combined with his equity stake in Tesla and his stake here in SpaceX, yeah, he'll be a trillionaire. One other interesting fact, you might have seen this. I think the teachers' pension plan in Ontario, they invested a little over $300 million in SpaceX in 2019. And so that stake on the IPO will be worth over $11 billion. And so that looks like probably one of the very best investments that the pension plan for the teachers has made. The irony of that, of course, is that the teachers are incredibly socialistic, left-wing Marxists to a large degree, but they love their pension, which really requires a very strong capitalist market. And now they're going to make this great return off of someone they really don't like, and a good friend of Donald Trump down in the U.S. There's a bit of irony there. You have to put a smile on your face when you hear that.
Yeah. And the other irony, of course, is Doug Ford canceling the SpaceX contract.
Yeah, I just read a release from, I'm on the mailing list for the Conservative Party in Ontario, and how he wants to now rebuild in North America.
Yeah.
Mexico. All of a sudden now he's into working with the United States after we've lost all sorts of manufacturing jobs here in Ontario. Unbelievable. But at least maybe even if it's too little too late, it's better that he's trying to work with them now.
Yeah, I just don't think he's going to be fooling anybody. They're not stupid south of the border. And this guy spent months going out and showing his face on CNN and Fox and wherever he could get on and bash the president time and time again. So the idea that now he can go down there, make nice, and have everything be perfectly fine again, he's dreaming in Technicolor. I think that ship has sailed, but good luck to him. I guess he's got to do something. But it is interesting that we've seen this change in strategy from elbows up to elbows way down, and let's work together and let's all be friends and all this other crap. But they blew it. They really did. From the start on my show, I said that was the wrong approach with Trump. Just the wrong approach. And it took them, how long? Year and a half for them to figure it out that they were going down. That was just not the right approach with this particular president. And we hear all the time people like Jameson Greer coming up and said, hey, there were only two countries that retaliated against the U.S. tariffs. That was the Chinese, the China and Canada. So that's who we are aligned with in their eyes. And if Doug thinks that all of this stuff can just be swept away and we can all get along and sing Kumbaya, I think he's dreaming in Technicolor. Let's talk a little. Oh, go ahead. You want to weigh in?
No, I agree. I think that economics will rule the day, and I think we will get a deal done, but it won't be the best deal by far, and we would have had further slippage, and we can't afford it. We just cannot afford it with the United States. With total foolishness, we could have had a deal last summer easily if we were to sit down at the table and say, let's work together as partners, let's figure out areas where you're strong, we're strong, and let's multiply our strengths by working together, and that deal would have been done. There's no question about it. Trump is this guy, all the guys there are all business people around him, and that's what they want. Forget the bravado and some of the words coming out of Trump. Ultimately, he wants to do a deal that's going to work.
But the idea that we could browbeat the Trump administration into dropping its tariffs and being nice to us and all this stuff like that. To me, that's the mark of an idiot. That approach was just so wrong. It was so painfully obvious that it was wrong. But they stuck with it. I'll give them that. They stuck with it for the longest time, thinking that somehow they were going to come out of it as winners. And here they are now. Ford in D.C. meeting with, I don't know who's meeting with, but I doubt there's many Republicans, certainly not Trump supporters, that are going to be sitting down with Doug Ford and sorting things out. We got a few minutes left. I know you wanted to talk about the surprise surge of 88,000 jobs in May. So the Liberals were obviously spiking the football after that number came out.
Yeah, they were. And what's interesting is you really have 1 month, of course, means nothing. You go back year to date, we've actually lost 56,000 private sector jobs year to date at the end of May. And public sector's gone up by 11,300. So we're net loss, but substantial in the private sector. And we've had this small gain in the public sector, but overall, we're losing jobs. So this was an unusual month. And the longer term trend is brutal for us. We're losing jobs in the wholesale retail. That's partly because of the weaker consumer. Manufacturing, we've lost 44,000 jobs since the peak. That's not reversing anytime soon. And if we're fighting with the United States and we can't get a good deal with them, manufacturing is going to continue to erode. That's why Doug Ford's down in Washington. He knows that, and he knows that we're in a bad position. And then finance and insurance also lost more positions. And again, it goes back to why are we losing these jobs? Again, aside from some of the fighting with the United States and the tariffs, and it's all about capital, Mark. It's all about capital. We're not getting the capital coming into our country. And so we've had, as we've talked about before, over $1 trillion leave the country. And this, of course, is going to impact jobs if you don't have capital investment. But one number I'll leave you with as we get to the end of this time. In Canada, the total business investment per person, per Canadian worker, has dropped by 16% since 2014. So over the last 12 years, the capital per worker has gone down by 16%. If you compare that to the U.S., their capital per worker over the same period is up 26%. And so the difference there is unbelievably large. And that's why you've got growth in the United States, productivity growth in the United States, and very little productivity growth here, and employment under a lot of pressure, and our GDP not growing. Again, we've got to attract capital. We've got to cut taxes. There's other reasons also, taxes, regulatory mess and overreach and so on. But we've got to get the capital back in the country, or we're not going to create the employment, the jobs, or the wealth.
And yet we double down on failure. It's the same. It's net zero, regulation, DEI policies. They just stick with it like it's their life raft in the middle of a sea. The very things that are holding us down, they hold on to. Anyway, let's talk a little bit about RockLinc. How do people find out more about the terrific company that you now helm and get involved in terms of investing for their future?
Yeah, check us out on our website, rocklink.com, L-I-N-C for link.com. You can email us at info@rocklink.com, and we'll give you a free assessment of your finances, your investments, and let you know how we would run things. But that's all gratuitous, and we'd love to have the listeners check us out and contact us, and we'll get right back to you.
Jonathan Wellum, thank you so much for coming on the show. We appreciate it, and we appreciate you being our sponsor.
Terrific. Thank you very much, Mark. Have a great rest of the week.
You too.